answer the question 1. The appropriate accounting method for Mercury Berhad to record the investment in Venus Berhad and Mars Berhad is the acquisition method. Under this method, a business combination is viewed from the perspective of the acquirer. The amount of NCI refers to the group of shareholders who did not control the entity. Since Mercury holds 60% of Venus, so the relationship between them is parent and subsidiary. So Mercury has control over Venus. For the investment between Mercury and Mars, it also falls to subsidiary relationship because Mercury acquired 70% of Mars and other 30% treated as non-controlling interest. Question 1b. As we can see, the amount of goodwill for the Venus Berhad is 456,000. That come from the total amount of CT and NCI that compared by fair value of net asset that at the date of acquisition. The total amount for fair value of net asset at the date of acquisition is amount 5.2 million. And the amount of 5.2 million will multiply with the interest of NCI, which is 40%. From that, the amount we can get the amount of NCI. So the NCI will add with the total amount of consideration transfer, and from that, from the total consideration transfer and NCI will minus with the total fair value of net asset. So from that we get 480,000. So since the Venus has 5% of impairment for the goodwill, we should multiply 5% with 480,000. So from that we get goodwill amounted 456,000. Okay, from for the Mars Berhad, we get bargain purchase that amount 665,000. That come from the total of consideration transfer and NCI that compared by fair value of net asset at the date of acquisition. The amount of fair value of net asset at the date of acquisition is 4.55 million. So the total that come from CT and NCI, which is 3.885 million, should minus with 4.55, and from that we will get the amount of bargain purchase. Okay, Mercury also had acquired preference share capital 40%, and we can see there is no goodwill from the calculation. So I will answer for the question 1C. From the acquired at the date of acquisition for the Venus, we can get the amount of NCI is 2 million, and for the Mars we get the amount of NCI is 1.365 million. So I will explain the calculation for the return profit. First is return profit of Mercury. We get the carried down for return profit of Mercury is 17.066 million. From the calculation, which item for the ordinary dividend payable, since Mercury declared before the year end and final ordinary of 200,000 and did not yet provided, so we should minus in the return profit of as a dividend payable. And Mars also declared before the year end a final dividend of 150,000. Since Mars is subsidiary of Mercury, so we should include 70% of 150,000, which is amounted 105,000. And also Venus, since Venus is a subsidiary for Mars, we should include the amount of ordinary dividend receivable, which is amounted 120,000. And also, since we get bargain purchase and we have impairment of goodwill, we should add in return profit of Mercury. Okay, for the return profit of Venus, we get 4.7 million. So since Venus is subsidiary of Mercury, we should proportionate it in NCI and group return profit. And so the total that we apportionate it to NCI among 1.880 million and the balance 2.820 million we should add in group return profit. Okay, for the return profit of Mars, we get 100,000 and we get loss 100,000. Since Mars also a subsidiary of Mercury, we should apportionate it 70% for group return profit and 30% for the NCI. And since the Mars have ordinary dividend, so we should add in minus with the in the return profit. Since Mercury Berhad acquired Mars during the year, so we should find the amount of pre-return profit for the year. So this is the calculation for pre-return profit. So at the end, the total of group return profit is 19.816 million, and for the total NCI is 5.895 million.
Now I will explain the consolidated statement of profit and loss of Mercury Berhad for the year ended 31st December 2017. Okay, for the revenue, since Mars is acquired during the year, so the revenue will be times with 6/12 sale of goods for both transactions. Under additional information number 2 and 3, we have minus the revenue and cost of sale. Okay, so the gross profit from the revenue minus the cost of sale, we will get the 33,450,000. Since there is the intangible asset, so the impairment loss is 100,000. Bargain purchase and impairment of goodwill was transferred from the calculation of goodwill of Mars and Venus respectively. Okay, so after we minus and plus any expenses and revenue, so the profit before tax is 17.696 million. Okay, so profit before tax, we minus the taxation of the year, so we get the profit after tax is 11.119 million. Okay, so the profit after tax we attribute to the NCI and the parent. Okay, so this is the consolidated statement of changes in equity for the year ended 31st December 2017. Profit after tax of RP and NCI was transferred from the profit attributable to parent and NCI. Since Mars was acquisition during the year, so the amount of 3.21 million was transferred from schedule of Mars. Okay, for the share premium, since Mars acquired share at share premium, the amount of 422,000 is come from 1.2 million times 20 cents. This is the consolidated statement of financial position as at 31st December 2017. Okay, for the PPE, since trademark was included in PPE, the amount has to be deducted and plus in the intangible asset, but there is 100,000. The amount of the impairment loss also will be deducted. Okay, the amount of 500,000 is from the unrealized profit sold of the equipment, and the amount of 100,000 is the depreciation. Okay, for the amount of 1.2 million was the fair value of the equipment of the Venus and have the depreciation of 300,000. For the inventories, 4 million of goods that still remain in the inventory of Mercury will be times with 5% and will be treated as unrealized profit. For the bill receivable, since the bill payable of Venus of 25,000 is due to Mercury Berhad, so Mercury Berhad has discounted 10,000 of this bill. So we should minus 15,000 from the bill receivable or loan to Mars Berhad. Mars Berhad was obtained 1 million loan from Mercury, but it has been paid 800,000 and another 200,000 was remitted. So there is no balance left. The amount remitted, 200,000, will be repaid as cash interest. For the account receivable, the amount 1 million is agreed as recorded in the account receivable of Venus, and for the goodwill was transferred from the, for the equity and liabilities. For the ordinary share capital, the amount of 400,000 was from the bonus issue, and 2.1 million was the new acquisition of Mercury Berhad that not be recorded. Okay, the amount group retained profit, that is 19.816 million, and the amount of group general reserve of 4 millions, the amount of NCI of 5.895 millions come from the schedule, and the amount of share premium of 420,000 come from the statement of the changes in equity. So we get the total balancing figure of the consolidated statement of the financial position as at 31st December 2017 was 16.691 million.
Okay, now we proceed to the question 2. Question 2A is the areas covered by the contractual agreement under MFRS 11's joint arrangement. First, the cover area is the activity duration and reporting obligations of the joint arrangement. Second is the appointment of the board of directors. Third is the decisions making process such as voting rights. Fourth is capital or other contribution by the parties, and lastly is the manner of sharing among the parties of the joint arrangement, assets, liability, revenue, expenses, or profit. Next is question 2B. Joint control according to MFRS 11 is the joint control exists where the parties contractually agree to share the control and decisions about the relevant activities of the joint arrangement, have the unanimous consent of all the parties sharing control. The parties has to assess the extent which the parties should act together to direct the activities that significantly affect the returns of the joint arrangement. C is the accounting treatment of each type of the joint arrangement, specifically related to the rights to the asset and obligation to the liabilities. There are two types of joint arrangement, with joint operation and joint venture. For the joint operation can be structured either through a separate entity or no separate entity is established. The ventures is called joint operator, have right to the assets and obligations to the liabilities of the arrangement. The operators will recognize their own financial statements, their interest in asset, liabilities, revenue, and expenses in the joint arrangement. The parties to the arrangement share all the interests. For example, which is ownership in the asset relating to the arrangement in a specific proportions, which is the proportion to the parties' ownership interest in the arrangement, or the proportion to the activity carried out through the arrangement that is directly attributed to them. The parties to the arrangement share all liabilities, obligation, costs, and expenses in specific proportion. As for joint venture, the joint venture is a form that involves the establishment of a separate entity. For the venturer, its contribution to the joint venture will be disclosed as an investment, and for the joint venture, the contribution made by the ventures are capital contributions. The assets brought into the arrangement or acquired by the joint arrangement are the arrangement assets. These parties have no interest, such as no ownership of the asset of the arrangement. The joint arrangement is liable for the debts and obligation of the arrangement.
Question 3. Question 3 is stated that what is the relationship between Lily and Barry Berhad before and after the issue. On date 1st July 2014, Lily acquired 75% ordinary share of Berry for a consideration transfer of 1.8 million and a fair value of net asset 1.6 million. On date 1st May 2017, Berry made a right issue of 330,000 shares and the amount should be added with an ordinary share capital of 800,000 and the new amount of ordinary share capital is 1.12 million. Prior to the right issue, the group owned 75% interest, that is, consists of 600,000 preferred share. As it did not exercise its rights under the right issue, it continues to own 600,000 shares. Then right issue will increase the issue share capital by 322,000. Therefore, the number of issue share will be 1.12 shares. Its interest has diluted from 75% to 54% and increasingly the NCI from 35% to 46%. Question 3B, amount of goodwill consolidation. For the consideration transfer of 75%, it amounted to 1.8 million. Should be plus with NCI of 25% times with 1.6 million, and the total of both is 2.2 million. Should be deducted with fair value of net asset of 1.6 million. So the total of goodwill that they acquired is 600,000. For question 3C, it requires us to calculate a gain or loss arise in Berry Berhad. The calculation is shown besides me, and we are using a written control method, and the format is proceed received minus fair value of net asset measurement on date of disposal. So for a proceed received, 2/5 times with 600,000 and times with 50 cents, so amounted to 120,000. For fair value of net asset measurement on date disposal, we just took from the information given, which is 1.05 million. So we got a loss to statement of profit or loss amounted to 930,000. For question 3D, assume that Berry made a private placement of 450,000 shares for RM 3.5 million. The fair value of net asset before placement is 5 million. Berry's share price is at 7 ringgit after the placement. So the goodwill on consolidation was 600,000, being 1.8 million minus with 1.6 times with 75% owned by Lily for the acquisition of ordinary share. And before the private placement, Lily had 75% controlling interest in Berry Berhad. As a result of private placement, the number of issued shares would be 1.5 million, which is 450,000 plus with 800,000, with Lily Berhad holding 600,000 shares only. Therefore, after the placement, Lily Berhad interest drops to 48%. So the amount of goodwill on consolidation is fair value of shares in Berry amounted to 4.2 million, comes from 600,000 times with 7 ringgit, and should deducted with proportionate share of net asset before placement, which is 5 million times with 75% amounted to 3.75 million. And we also should deduct the goodwill amount 600,000, and Berry got lost to statement of profit or loss amounted to 150,000.
According to the MFRS 10 of Consolidated Financial Statement, the relationship between both are Aisha is an acquirer and Adam is an associate. Acquirer is an entity that has control of another entity, and associate as an entity over which the investor has the significant influence. Significant influence over the investee means if the entity holds directly or indirectly 20% or more of the voting power. Question: since Aisha only acquired 40% ordinary shares of Adam Berhad, it will only be recognized as an associate. On the same time, Aisha also had acquired 50% convertible debentures of Adams. Aisha would increase the interest in Adam Berhad by 25% if the debentures were converted into ordinary shares. So, if that happens, Adam would be changed from associate to subsidiary of Aisha. Since at the end of this of the accounting treatment, there is none of the debentures had been converted into ordinary share, so there is